S&P 500, a midweek update as we have just finished Wednesday, Veterans Day, November 11th. Here is our S&P 500 intraday chart. We had a nice gap up open today to start the day. We set our initial balance high, and by the time the European close came around, we broke out of our initial balance range and we traded right up and took a look above 35.80.84. This was the level we needed to close above today to fit the pattern that we have seen happen over and over again over the course of the last couple of years that I have rebooted this service. We've watched multiple all-time highs happen, and when we don't stick the landing and make the all-time closing high to go with it, we have about 2 more sessions to get that done. And if we don't get it done, we usually turn around and sell off somewhere around 100 points or more when that happens. Well, here we were today, looked above this level we needed to close above today, failed, sold off. We made a little bit lower low, but we reversed at the end of the day, and the market on close was $1 billion to the buy side. So that kind of made me a little leery about this failure to make this close day. Also, today was a holiday for part of the market. The bond market was closed, and it was a bank holiday. So maybe we've got to give it one more day to get this job done, and if it doesn't get it done, then I think we're gonna see some selling kick in. Here is ES. After here's where we closed with the S&P 500. You can always see this at the 355 candle, and the volume, can always see it ramp up. Here was the close, and then boom, we had already rallied up to here, closed, and then as soon as the market closed, we rallied right back up to the high of the day. We didn't rise above it, but we came right back up to it, and the final close for ES was just off of that high of the day. So in the morning, we have CPI data, and we have the weekly jobless claims. If we are back up here close to the high of the day or above it, the high of the day from Wednesday, that means we're going to be above 35.80, that 35.80 level on the S&P 500. And maybe what we're going to do tomorrow, if that is the case, is we're going to come in and we're going to make this support, and it's not going to be a question about whether we can close above it tomorrow or not, because it'll be more like our low of the day, and we will maybe even rally all the way to try and take a close above 3,600. Okay, so that's if there isn't a bad reaction to weekly claims, so on and so forth. And if today's miss of that close was just a Wednesday OPEX related thing, combined with it being a semi-market holiday. Here is our roadmap. Here is what is fueling us underneath. The 10-day simple moving average crossing up through the 50-day, and then today it crossed up through the 20-day. These are buy signals, but we unfortunately got front-loaded on everything on Monday when that vaccine news came out in pre-market, and we got our probably hit what was supposed to be our high for the week all in the first day. And in fact, we still have a little bit further to go because ES made a higher high than this in pre-market on that news, and we never resolved it in the light of day with the parent S&P 500. And that's going to take us to about 36.74 or 75 or so when these two levels get resolved. When the S&P 500 is making an all-time high at the same time as that ES level did. So we do have a little bit higher that we could go. That's not as important to me right now as getting this close in above 35.80.84. Now, looking back to where that close comes from, it comes from here in September when we made the 35.88 all-time high, and the close was 35.80. This was on a Wednesday going into Labor Day weekend. Here was Thursday and Friday. Thursday was a bad reaction to weekly claims and coming down off of an all-time high, and we went ahead and sold everything that wasn't nailed down, and and it followed through on Friday, and it followed through as well on Tuesday when we came back, and now here we are going into a Thursday-Friday pattern again. So that concerns me a little bit. So if that rally at the end of the day was the bullshit part and not the sell-off today and the failure to make the 35.80, then it fits with the pattern that we usually see of failing to make that all-time closing high and then getting into a Thursday and Friday where the market just tends to take money off the table and reset things in the following week. If we are going to sell off from here rather than continue the rally up and resolve this level up here, we have Tuesday's low, which is our low for the week so far, and it was a hold just above Friday's close. Friday's close was our new weekly all-time closing high. If we break down below Friday's close, we test Friday's low, and if that doesn't hold, we get into the gap. And the halfway back for the month of November right now is right about, a little more than halfway through this gap. It's at 34.6287, and we already have marked, when you look to the left, 34.60 as a really good line in the sand for support and resistance as it is. And who's coming up right on our tail here? But the 10-day simple moving average, in fact, is probably going to be right up here around 34.60 when we open on Thursday. So if we are going to sell off, those are your points of reference. Holding a higher low on the week. If that doesn't work, filling this gap in. If that doesn't work, testing Friday's low. And if that doesn't work, I think we will probably hold in here around 34.62 and hold above the 10-day simple moving average. And if I'm wrong, and if I'm being too light on this, then we have a whole roadmap. We have all these gaps that we've made in the month of November already as we headed into the election. Okay, I'm going to stop it there so that I don't go on for too much longer here. Have a great rest of your night. If you have any questions about this video or any or the S&P 500 or any stocks right now, you can always shoot me a direct message or send me a tweet. Have a great rest of your evening. As always, good luck and good trading.